Hey family, it's CJ Investing here. Welcome back to another video. Today I'll be doing a video on Visa, ticker symbol V, and I'm gonna tell you if I purchased it, if it's on my watch list, and just what I'm doing with it. So let's get straight into it. As you can see, Visa right now is at $197.76. It was down a little over 1% on Friday. You could kind of tell its chart over the last 3 years, the last 5 years. It's grown quite a bit. And this is just another opportunity to purchase some if you feel it's at the right value for you. So, as you can see here, the volume is about 4,508,486. The dividend right now is about 37 cents per share. The yield is 0.75%. Earnings per share is $6.51. The PE ratio is at 30 at the moment. I'm doing this on Fidelity, by the way. You got two analysts. They're rating it buy, and then the rest are neutral. I mean, I don't put a lot into that, what analysts do, but it does affect the stock price. So their fair estimate is 268, which is quite a ways from where it's at right now. Right here you can see some news. As you can see, Visa's business model remains resilient amid uncertain times. August U.S. payments volume on a year-over-year basis was up. So here's the profile. Visa operates as payments technology company worldwide. The company facilitates digital payments among consumers, merchants, financial institutions, businesses, strategic partners, and government entities. It operates VisaNet, a transaction processing network that enables authorization, clearing, and settlement of payment transactions. In addition, the company offers card products, platforms, and value-added services. It provides its services under the Visa Electron, Interlink, VPay, and Plus brands. Visa Incorporated has a strategic agreement with Ooredoo to provide an enhanced payment experience for Visa cardholders and its customers in Qatar. Visa Incorporated was founded in 1958 and is headquartered in San Francisco, California. So it's in the IT service industry. The total revenue as of June 30th, 2022 was $28 billion. Right now the shares outstanding are 2 billion. Institutional ownership is very high at 93.39%. PE ratio, trailing 12 months. So they got it here about 29. It's about 29-30-ish range. Price to book value 12.41. Profit margin 46.89% as the most recent quarter, those are great margins. I think the previous quarters they was in the 50s, so it just dipped a little bit, but it's still great compared to the majority of the companies in the stock market. I mean, I was honestly surprised about these margins, especially compared to all these other companies. I think it's comparable to like Apple, Microsoft, Google, those type of companies. I think it's even better than those because Visa, they really don't have any expenses like that. So they are a very profitable company. And the total debt to capital ratio was 36.63 as of the most recent quarter, meaning that they have more than enough cash or assets to pay off their debt. So they have a very healthy balance sheet. So as you can see, the earnings versus the estimates, they beat on all the estimates as of on this chart, as of recent. And the most recent was 198. And as you can see, it's increasing quite a bit, which is what I like to see. Earnings per share growth, last quarter versus same quarter prior year, 35.59%. As you can see, the ex-dividend date was August 11th. The pay date was September 1st. And the payout ratio is 22.09%, meaning it's very low, and that's within that golden range where you want the payout ratio to be, as far as them paying money out of their cash flow to pay out to dividends to shareholders. So it's very low, which meaning it's a lot of room for dividend increases over time. The annualized dividend is $1.50. So this was just me viewing it on Fidelity Investments app. So these are Visa's most recent third quarter results for 2022. The net revenues 7.39%, 19% change. Payment volume was 12%. We can read through some of this. As you can see here, here's their income statement summary. So the net revenues were, looks like about 7.2 billion, which was up 19%. Their net income was 3.4 billion, which was up 32%. Earnings per share was $1.60, up 36%. Like total operating expenses went up, and looks like their effective income tax rate was down. It was at 10.9%, which is really low. That income, we just seen that. Payments volumes, which was a 12% change. So assets were 14 billion versus 16 billion in 2021, which was a decrease. Total current assets went up to 28 from 27, so that was an increase. Let's see. So prepaid expenses and other current assets were much higher than they were in 2021 at 2.6 billion. Looks like. So total assets went from 82 billion in 2021 to 85 billion in 2022. So that was quite of a bit of an increase, which is good. So our current liabilities went from 15 billion to 20 billion, and the total liabilities went from 45 billion to 49 billion, which you don't want your liabilities going up, so that's not too bad though. Their assets can cover their liabilities, so they can pay it off at any time if they desire to do so. So they got the total equity is, looks like 35 billion, down from 37 billion. Total liabilities and equity went from 82 to 85. Has very little expenses. Their biggest expense being litigation provision, which is like a court case type of lawsuit thing, I guess. So they'll pay that off. They won't have to worry about it anymore. But other than that, their expenses are in the millions, and they make plenty in profit. Got net revenues went from 6.1 to 7.2. Total operating expenses went from 2 billion to 3 billion. Net income, which is their bottom line, it went up from 2.5 billion to 3.4 billion for the 3 months ended, and for the 9 months ended, it went from 8 billion to 11 billion, which is what we want to see. We want to see those revenues increasing quarter over quarter, year over year. And if they have one bad quarter, 1 or 2 bad quarters, that's not too bad, because we know strong businesses like this with strong balance sheets, strong financials, they can make it through. They can have a bad quarter, and that just presents another buying opportunity for us long-term investors like you and me. So now I want to look at something else. So let's look at Yahoo Finance. This is off the Yahoo Finance app. And we could kind of take a look at how their revenues have been doing. So as you can see, they've been increasing. It went down a little bit in 2020, which that's when the pandemic hit, but they've been, for the most part, going up. As you can see, from 2018, it was around 20 billion all the way to 2021, which was at 24 billion. If we go to quarterly, as you can see here, for the past 4 quarters, they have been going up. Now that's beautiful. It's been going up like a staircase from 6.5 billion to close to 7.5 billion. So that's good. As you can see, earnings per share, they've been going up, except in Q1, which it was slightly down. But that's for the most part, pretty good pattern. They got total revenue of 28 billion. The cost of revenue is only 5.4 billion, which means they have an awesome gross profit of 22.6 billion. That's a really nice gross profit. They have very high margins and very high gross profits. So this is the type of business that you really want. They don't have to worry about cash like that, because they don't have to really pay for expenses like that, other than probably like advertising. But Visa is everywhere. It's worldwide. Expanded in many different countries. I don't know a country that it's not in. Like they have many partners all across the world. And Visa is like the standard. Like all of my cards are Visa. I really like them. I've had them for many years now. So as we see, their operating income is 18.9 billion. Net income 14.6 billion. And this was their income statement. Let's go over to their balance sheet. So they had total cash, and this was as of, well, let's do quarterly. So total cash as of June 30th, 2022 was 17.35 billion. total current assets of 28.9 billion, and you got total assets like we said before of 85.4 billion. So they got plenty assets, and they're, as you can see from the previous quarters, that their assets have been, it was 2 quarters where it kind of went down, but for the most part they've been going up until now. So they've been increasing their assets, and their liabilities have been increasing slightly as well. So just have to keep an eye on that. But they're in a pretty good cash position, so we have nothing to worry about when it comes to investing in this company. Let's look at the cash flow statement. Net income 14.6 billion. As you can see, all this. They have free cash flow.
As you can see, Visa shares outstanding is going down. It's going. It went from 4.5, it's like billion, down to right here 2.384 billion. So they've been massively buying back shares. This is what you want to see when invested in any company. You want to know that the shares outstanding is going down, so that they're not diluting you on your capital investment. As you can see here, it shows you on macrotrends.com that it's going down, 2.26 decline year over year, 1.5% decline, 1.98, 2.2% decline, 18. And let's look at some other metrics. So you got your price to free cash flow is what something I look at that I think is important as well. As you can see, the stock price, it's been going up. As you can see, the price to free cash flow ratio is very low as of 2022. There was a spike in like 2013, but it's down. It's at 30.66, which you wanted to be closer to 20, but compared to a lot of companies out there, it's not very high at all. And you're getting a decent price. It could come down in price a little bit, but it's not at a bad price right now. Buying it at or under 200 is pretty good, at least in my opinion. And this is the debt to equity ratio. As you can see here, you kind of want it under 1, and it is, where is it? It's 0.58, meaning they have more cash than you have debt. So that's something else you want to see. Over here, they have it at 0.63, but that's still good. That's still good. That means they have a healthy balance sheet and that they're doing what they're supposed to do.
This is what they paid to their shareholders in dividends. They have 16 billion in free cash flow, and that it's been going up for the most part, except for August of 2020. It was down, but for the most part, it's been going up. They have plenty of free cash. They have plenty of free cash flow, so they have nothing to worry about in terms of that, in terms of dividends, in terms of share buybacks. So they're in a good position to capitalize. But this was just a short video on just looking at Visa. I just want to say I went ahead and purchased it in my Roth IRA. I think it's a great company. It's going to do well over time. It's a product that I own. I always emphasize get into something that you know and that you love and that you possibly use if you can, because it's easier to understand those type of businesses. Yeah, just do your research, do your due diligence on the companies. Even if you use them, it's still important to do your research, kind of understand the company. But I just want to say thank y'all for watching. Thanks for tuning in, always supporting. I'm going to try to keep dropping these videos, but show your support by dropping a like if you like the video. And if you like more content like this, make sure to subscribe to the channel and turn on your notifications. I would appreciate that. So I just want to say I love y'all. I appreciate y'all. And I hope y'all have a fantastic rest of your day. All right, peace.